Thanks again, Rick. It's good to see you for coming into the RE/MAX Performance Studios. I really appreciate it, and I know that our blog public does too. So, I get asked a lot of times, and we're obviously realtors, not finance people. However, I get asked, what are the different types of financing out there? What's the difference between FHA, VA, and conventional?
Well, first of all, it depends on your buyer's credit score.
Okay.
I mean, that's going to be your first determination of what kind of loan program you have. The second would be down payment amount. Okay. There's certain programs that we have that's zero down payment as far as a USDA loan. As long as the house is qualified for a USDA loan and their credit score is over our minimum needed, okay, then you can do a USDA loan with no money down.
Is that only for certain areas?
Yes, it's only for rural development. USDA is for rural areas, and there are very few in the greater Dayton area, but once you go out a little bit farther, and we run it to make sure before we even talk about doing a USDA loan to make sure the address qualifies for it.
Are there any other types besides VA of zero down payment loans and USDA?
Those are the two main ones. There's a couple programs that we have for down payment assistance, okay, that will get you close to it. So where you put, so say if you're doing an FHA loan, which is a minimum of 3.5% down, you can do down payment assistance of 3%. Okay. So you only put 0.5% down.
Are there any other qualifications on that as well?
It's credit score driven, and it's also income driven. So if there's income limits that you have to meet to qualify for it, and also credit score is definitely one of those.
Sounds like we're talking a little bit about buyers who have maybe a little bit more challenged credit or a little bit less down payment. Mm-hmm. But what are the other types of financing out there, and what's the best for a person who maybe has better credit and more down payment? Can you talk about that a little bit and what the benefits of putting more money down than not?
Sure. If you have the better credit, 700 plus, high 600s, 20% down, even as little as 5% down, that's a conventional loan. Okay. You want to do a conventional loan, they do as little as 5%. And if they're a first-time home buyer, there is as little as 3% down. Great. As long as you do have that higher credit score. Okay. If you're in the lower credit scores, the mid 600s, down to lower, you're probably looking at it as an FHA. Okay. An FHA loan, that is your 3.5% down. Standard, great rate still. Rates not really mattered on credit score with FHA. You're probably still, right now, you're in a range of 3.5% to 4% for an interest rate.
And you think they're probably going to stay there for a little while?
I think they're going to stay there for a little bit. I mean, if I knew for sure, I'd be retired, so we know how the stock market went.
Right?
Yeah.
So tell me, what do you think, what is the real benefit if somebody does have the money to put down? What is the benefit of putting more money down in your house as opposed to keeping it in the market?
The benefit to put more money down is definitely private mortgage insurance. Okay. The more money you put down, which is a minimum of 20% down, you will not have private mortgage insurance. If you do go over 20% or under 20% down, so you're putting 10, 15, 5, you will have mortgage insurance on it, but there is always an option to get rid of the mortgage insurance, but that does come at a higher interest rate. So that's the biggest benefit, and obviously the equity you build, so if you put more down, you're having instant equity.
So thanks again for coming in. I really appreciate it. Is there one thing that you want to tell my blog audience as to why they might want to consider Bank of England to do business with? I mean, we do business with you because we know you're awesome, but yeah, what would you like to tell them?
I think the first thing that we look at is our customer service. You deal with one loan officer from start to end. Okay. Obviously, we have very good turn times. So when you submit a loan in, to know what we need to get your loan cleared so you can close on a new house, okay, we're very good on the turn times to get that done. And then just our whole pre-approval process, we are very thorough. So as you know, we do ask for certain things. So when you do find a house, you are fully pre-qualified to buy the house.
And that's important.
Yeah.
You're not just credit worthy and breathing.
Yeah, we just don't look at your credit and just say, oh yeah, you're great. We actually look at your income and verify it before we actually write the pre-approval.
Awesome. Well, we certainly appreciate that. Yeah. I appreciate you coming in. Would you like to tell them how to get a hold of you?
The best way to get a hold of us is either on our website at www.boecincinnati.com, okay, or give us a call at 513-229-9660.
Great. I appreciate you coming in. Look forward to seeing you soon.
No problem.